Good noon, everyone. Good afternoon. Can you guys hear me? Now? Can you guys hear me now? Yes? Good? All good? Everyone can hear me? Great. Great. Thank you all for joining for this order flow session. We are going to be speaking about the market activity as of now. We're going to be focusing on this keyword now. I'm not going to be talking to you about what's going to happen 2 days from now. I'm not going to be talking to you about what has happened 3 days back, 2 days back, even yesterday. But we're going to be focused on the market activity as of right now. Okay. I'm going to open the floor to questions as well. And we're going to be taking some questions, which you may have about the order flow also. All kind of questions are welcome. Any question which is asked is supposed to be an intelligent way of understanding and learning. So no question goes away getting itself called stupid. The most stupid question is always the one which is never asked. So feel free to ask your questions. Let them keep coming in. I'm here to take a few questions, and we'll try to wrap it up because we're in the middle of a trading session, and I hope to get some information to you across also, right? So you're looking at a Bank Nifty order flow chart on screen, and I hope everyone has been able to take advantage of the move which was coming in. We spoke about this yesterday also, and I put it out on X also that I was expecting a bit of something different today. This was basically when we were speaking about the market structure in terms of our understanding of where the market was. So this is a market profile chart, and I'll bring the Bank Nifty. I'll bring the Nifty up also. Let's put the Nifty on the right hand side, and we will do the market structure, and that's going to give us an understanding about what we need to do for the day today, right? And I'll blow into the order flow as well, and we will discuss. So this is what you're looking at, the market profile chart, and there are two distinctions we make over here for those who are joining me for the very first time and are seeing these charts for the very first time. What you're looking at on screen is what we call a market profile chart, and the idea behind a market profile chart is to give us an understanding of structure, and structure is the building block of the market. It tells you what you should not do, okay, and that is more important than what you should do, because when you know what not to do, you eliminate a lot of mistakes which you do as traders, right? So the first thing we discussed yesterday when I was looking at this Nifty chart, and I put it out on X also, that this particular profile was balanced. It was what we call the Gaussian curve, and from a Gaussian curve, the first thing you never do is to write a straddle, right? I know a lot of you come into the market and you've been exposed to a lot of strategies, and some of these strategies tell you that the minute the clock starts at ticking at 9:25 a.m., you got to write an at the money call, and you got to write an at the money put, and that's how you have been told, and that's how you operate, and you tend to lose a lot of money because you're not having an understanding of structure. I want to tell you right now that every time you see a profile like this, like the Nifty one, this is not a market to write straddles. This particular profile which is there on screen, this is not a market to write straddles, because the market is going to give you a one-way move out of this, as you saw today, right? You're writing a straddle up over here at this 24,800 level, 750 level, fine, that is understood, but this was not a market to write straddles at the close, and that is the first thing you realize what not to do when you're looking at this market profile chart. Every time you see a structure like this, like what we had in the Nifty, you know that this is a market which is going to get directional, and it's going to get directional very fast, very quickly, and that's the time you look out for those long kind of a trades, right? And what was the direction, okay, chosen by the market today? The market, okay, made it a point to go up today. And if you were shorting puts, if you were long calls, if you were long futures, you would be on the right side of this market today in the Nifty. Even in the bank Nifty, okay, the market is directionally up and it is still putting up those IB patterns, those initiative buying patterns, and you have a structure, okay, which is going up, right? So what not to do is as important as what to do. Okay, let's take a deep dive. And this session today is basically, okay, about order flow. So I'm gonna, okay, bring up the order flow chart up on screen again, and we look at, okay, what the message of the order flow is right now, as we head into the close about 2 hours from now. So let me bring up, okay, the order flow chart, and we'll go, okay, with the bank Nifty. I'll talk to you, okay, about the Nifty as well. So what do we have? Okay, keep those questions coming, guys. Okay, I'm going to read you. Let me just, okay, blow up, okay, an order flow chart, and I'll take those questions coming as well. Let me just take a minute, okay, to bring my mouse back on screen. Okay, kind of a dodgy screen today. Okay, all right. No, I had no intention to show you guys this, but my mouse is acting a little bit weird right now. Okay, all right. So okay, so I have got a bank Nifty order flow chart on screen, and what you have to look at from the open today, if I pan left, is you're seeing a lot of these green candles on screen. Now, when I say green candles, I'm not looking at the color of the bar, but I'm looking at it in terms of the IB activities. And there was, okay, some one IR signal, okay, which came in, okay, which was that initiative seller. But right from the open, you're seeing a number of these IB candles on screen, and those are initiative buyers. And every time an initiative buyer comes into the market, he's telling you, okay, that this market is now, okay, being dominated by the buy side, right? Now, what we're looking for is one basic math over here, and that math is demand and supply math, right? And when demand is higher than supply, you say price is moving up. And when supply is higher than demand, then you say, okay, price is going up. There's nothing else, okay, to the market. And the entire purpose of, okay, having this order flow chart up on screen is to know which are the specific points in the market, okay, where demand is higher than supply. And if demand is higher than supply, by what percentage is it higher? And obviously, okay, it flows from there that the higher the percentage of demand, the greater is going to be the jump in price, right? Now, what we are doing over here is we are taking the focus away from price and we are putting it on volume, right? And I said this, okay, a few days back when I was live on Twitter also, and we say this all the time, okay, when we are doing our presentations also, that there is a big problem, okay, in the derivative trading industry today, and you all know, okay, about what this problem is. This problem is, okay, about the fact, okay, that a lot of people are not making money in derivatives trading today. And okay, there's been a report, okay, which is coming from SEBI also, and they've addressed, okay, this issue. They've addressed this as a problem, and they also, okay, seem to say that 90% of traders are losing money in markets. Now, that is a data, that is a set of data, that's a set of information, okay, which is coming to us. It's also a fact, right? Now the question is what is happening which is leading to 90% of traders losing money to markets? There cannot be one simple reason, okay, to understand and to look at that. I was grappled, okay, with this problem myself, and I have, okay, lost money in the markets also when I was a new trader, right? But I understood one thing, that the world of derivatives, the world of derivative trading, these FNOs, these futures, these options, okay, and the instruments, okay, we trade out of, that is to be seen very, very differently from the world of equity trading. Now, the equity trading works, okay, with a price only approach, because if you take price and you bind it, okay, with an element called time, and you stay, okay, long in the market, then using an equity only approach, you will make money, right? For example, okay, your SIPs, and some of you, okay, would have had SIPs, okay, from 2010 and 2012, and some even more before than that. The element of time, because, okay, you're investing time along with your capital, the element of time is giving you money, right? And some people are into stock equity, okay, for 25 years, 30 years, 40 years, and they are in big profits today, and they have made a lot of money today, not just because of the role of price. It's because, okay, they have given, okay, a lot of time into the market also. They have, okay, added that investment with the amount called time, and they are, okay, generating profits today. But when it comes, okay, to the derivative side of markets, there is no advantage of time, okay, because you're against the clock over here, right? So you open up a position, you have something called a weekly expiry, and today, okay, is Fin Nifty settlement. There is something called a Thursday Bank Nifty settlement. There is something called a Wednesday Bank Nifty settlement, and you have to open and get a result, okay, before that series gets over. And even, okay, if you're on a monthly contract, you have to, okay, get your result, okay, before that contract, okay, gets over. So what you're doing, okay, in the derivatives market is you're fighting time. You're going against the principle of time, right? And because time is not in your favor, okay, you have to work, okay, with something, okay, which is called volume. And you have to make volume your friend. You have to make volume as an asset. Right now, I understood this as a derivatives trader when I made those initial losses, that focusing on price was not going to be enough. I had to, okay, take the help of my friend called volume, and using volume, okay, is how, okay, we are creating or crafting an edge for ourselves in this market, right? Now, what kind of volume are we looking at? We are not looking at volume below the bar. Definitely not. Okay, that is 18th century. Okay, a lot of people, okay, have tried, okay, with trading with volume below the bar. It does not work. I'm sorry, okay, it's not 18th century. Volume, okay, came into the markets, okay, at the end of last century, 1992 to be precise. But it's a 30-year-old concept. Okay, we are not focused on that kind of volume below the bar. We are not even focused on volume next to the bar. Okay, that is another 20-year-old concept. It was called volume profile. It was called volume at price, and has been around, okay, from 2002 2004, right? We are focused on something called order flow, which is volume inside the bar. So not below the bar, right? Not next to the bar. We are focused on volume inside the bar, and that is, okay, what these charts are all about. Looking at what is the buy-sided volume and what is the sell-side volume inside the bar. I want you to, okay, bear with me and understand this, that we are taking the focus away from price-based trading, focusing on the role of price. We're moving away from it, and instead, okay, putting our energies and our focus on the role of volume. And what kind of volume? Volume, okay, which is on the sell side, supply, and volume which is there on the buy side, or buy side volume, or demand side volume, right? And when you can, okay, make that out as an equation, and you focus and understand, okay, that there are periods in the chart where demand is going to be higher than supply, and price is going to move up as a result. And when you can identify that region on the chart where demand is higher than supply, you got yourself an advantage. And now you know, okay, that this part of the chart was dominated by buyers, and accordingly, okay, you can enter buy-sided trades in the market. not because of what price was doing, but because of what volume was doing at that moment, right? So and we identify these areas, okay, as areas dominated by IBs, which are called initiative buyers, and areas, okay, dominated by supply or initiative sellers. And we've spoken about that, okay, when we do our orientations, etc. The IB, the IS on initiative traders coming into the market and driving prices up, etc. Right? So all you have to do is, in this chart, focus on areas in the chart where the buy side volume is higher, and we made it easy for you and put it out over there as IB candles and IS candles for you, okay, to have an understanding of what these buyers do. Now, this way of looking at markets is going to be difficult, okay, for some of you, because, okay, you're still set in that price based mindset. You're looking at everything through the prism of price, and you will not see, okay, the impact of volume if you start looking at things every day, okay, from the point of price only. Yes, price is important, but not that important in derivatives trading. Nobody's told you this, and because, okay, a lot of people, okay, do not know this, is also the reason, okay, why a lot of people, okay, do not make money in trading, because they are focused on the role of price only. But like I've been saying, if you shift your focus, okay, from the role of price into the role of volume, and volume is what moves the price, right? Price by itself, okay, cannot do anything. You cannot, okay, send an order to the exchange without inputting your quantity, your volume. The exchange will not accept it, neither, okay, will your broker, okay, accept your order. So price by itself cannot do anything. But with the advent of volume, with the input from volume, okay, you can make price do things. And that is, okay, what we are focused on. Who are these people who are moving price because of volume, right? So on this chart, you have a lot of numbers, okay, coming to you. And I'm not interested, okay, in those numbers, okay, which are like, those 2 and 4s and those 5s and those 10s, those small lot traders, right? Those are not market movers. But we are focused on, okay, on the role, okay, of what we call LLT, large lot traders. And these are traders who can move price because of the sheer size, okay, they bring, okay, to the market, because of the advantage, okay, they have. We trade in a market where the retail, the professional, the financial, the FI and the DII, all of us, okay, coexist. It's in the same time period, okay, we traded from 9:15 to about 3:30 in the afternoon. Okay, we all have to coexist, and we all have to trade together, and we trade off the same instrument at the same exchange, right? But within that, would you not agree with me that a 2,000 lot trader, a trader who trades 2,000 lots at a time, is more important than a trader, okay, who trades 2 lots at a time, right? And this trader who comes in and trades 2,000 lots at one time is a market mover, and he's the one, okay, we watch out for when we see these trades. And why do you need to watch him? Because nobody is going to input a 2,000 lot order in the market without a plan, right? We think 20 times, okay, before inputting, okay, about our 4 lots and 5 lots and 10 lots as retail traders. But somebody who's putting about 2,000 lots of capital, or a trade of 2,000 lots in the market, do you think, okay, he trades without a plan? Do you think, okay, he trades without a strategy? Does he not know, okay, what he is doing, right? Do you think, okay, he's a trader who started off in markets yesterday? Absolutely not, right? For a trader to go, okay, to the size, okay, where he has the confidence to trade 2,000 lots at one time, he's at least, okay, about 5 to 7 years in business, in trading, and he understands the market, right? So it's a simple equation for us. We understand that when such a guy comes into the market, he knows, okay, what he is doing. He knows, okay, that he thinks in a certain way, and he knows, okay, that this particular trade of mine is designed, okay, to go into a sale. I'm not saying over here, okay, that he's going to get all of his trades right. But what I'm saying over here is he's got a plan which is much, much more sounder than a guy, okay, who does about 2 lots at a time, right? He's got the courage of his conviction, and we believe in that conviction, and we try to follow him, right? We also follow a lot of market orders, people, okay, who are putting market orders in the market. Now, all of you, okay, understand this. And when I say, okay, market orders, I'm talking about a guy, okay, who's in a hurry, okay, to get into the market. this is to be seen a little bit differently, okay, from what we call the limit orders of the market, which is a guy who's putting, say, okay, the option is trading at about 51,000 right now. A limit order would be somebody, okay, who's setting a price of 51,072, right? The current price is about 51,014, and he waits, okay, for the market to come to 51,072 to execute his traded quantity. But a market order would be somebody, okay, who's getting into the market right now at 51,015, and because he wants to get into the market right now at this particular point in time, we know he's on a mission or he knows something, and which is why, okay, we track, okay, these IB signals, because, okay, they are all market orders which tell you, okay, that this man knows or this trader knows where he wants to go and he's in a hurry. And when you get a lot of these people coming, and I'm not just talking about one guy, I'm talking about a bunch of them coming together, they are people in a hurry, they put those market orders together, that is the time, okay, a faster move comes, right? So it's not just, okay, about one element or one LLT, it's about an LLT, it's about a market order, it's about knowing, okay, where the market has volume, where it has no volume, okay, it is knowing, okay, about where some volume zones are in the market, clusters, and all of this, okay, coming together will give you, okay, a chart, okay, which is like that, right? So it's not just, okay, about one tool, okay, which we look at in order flow. You have to look at the whole universe of what the order flow represents, and it represents, okay, the LLT, it represents, okay, the initiative buyer, the initiative seller, it represents, okay, the limit order, the market order, it represents, okay, people who are trading in clusters at the volume zones, and it also represents, okay, areas on the chart, okay, where there is no volume. And I personally, okay, like to look at areas where the market has got zero volume. We will show it, okay, in some of our charts as zeros, and they tell you, okay, that particular zone had no supply, or it will tell you, okay, that particular zone had no demand, okay, okay, to drive price either way. And because of that, okay, the market, okay, moves differently, okay, when you see those zeros in your chart also, right? So this is just a broad overview about what you should be looking at an order flow chart. And I wanted, okay, to bring to your attention all this because a lot of you are just, very focused, okay, in a very narrow space, okay, and I want you to broaden your focus when it comes, okay, to understanding what the order flow chart is. The order flow chart is not just about your 10 bar cot. The order flow chart is not just, okay, about one element called IB and an IS. It's a massive universe when it comes to the trading world. Of 50,000 crore per day industry. That is what it is. And if you're going to be approaching, okay, this industry with a very narrow focus and a narrow way of looking at things, okay, the results, okay, are not going to be coming to you that well, right? And I also keep saying this, that the market is not made, okay, for one tool, right? However good your tool is. So in my case, okay, I work a lot, okay, with my 10 bar cot, but the market, okay, was not made, okay, for my 10 bar cot, okay, to decode everything of it. So I have to, okay, surround myself, okay, with an IB and an IS signal. I have to surround myself, okay, with a market and a limit order. And I have to surround myself, okay, with a cot, okay, at the end of the 3 minutes and the cot at the end of the 30 minutes, because the market speaks in different ways. And I have to, okay, find it good and find it within me, okay, to collect, okay, all that information which is, okay, flowing from the market, right? So don't just let one tool be the, the speaker, okay, for everything, okay, which is going on, which is happening in the market. A lot of traders, okay, make that mistake. The market is different every single day and will speak to you differently every single day, right? So I hope, okay, that was insightful. I'll just take a few questions which are coming in. We are still in the middle of a trading day, and I'll just like to speak to you about what happens, okay, from here. So anyone, okay, has got any questions? Okay, I think, okay, Uttam has answered a lot of questions. If you have any more, please, okay, feel free to speak out about them. So I'll, okay, draw, okay, your attention, okay, to a few questions, okay, I have been getting as well. Oh, the question is there any role of ATR for deciding targets for and stop loss of order flow trades? No, order flow, we do not use ATR at all, okay, for deciding signals. Okay, let's look at this question, okay, which came to me. So I got this question a couple of days back, and I think I put it on screen and all of you can read it. So this was around the time the market was getting that demand around 24,430. We are currently at about 24,727, and this trader, it's a very good question, and that's the reason I'm highlighting this question. This trader was focused on the role of the IBs, and the cot was green. And the market for that 15 or 20 minutes started going against cot, and started going down. So this was around 24,430, and the market went down to about 24,370 in the space of those 20 minutes. And obviously it is very natural for anybody to get worried, because the setup and the system and what the result was two completely different things. Right now, this question was why is the market going down? And I looked at this question. I understood that this trader is a little bit scared. Maybe he had a position and he didn't know what it was to do. I told him that wait, this market is going down. It is just a price mechanism to trap some traders out, because the job of price, guys, is to trap traders. It is not to point ever in the right direction. Only volume with price can point to the right direction, volume confirmation. Right? That is why when you have something called a breakout, a lot of big traders or seasoned traders in the market will always tell you, is that breakout come up with the volume confirmation? Because volume is majority of trade participating in that price move. And when that happens, that is the time that breakout is successful or a breakdown is successful. So without volume, price cannot do anything. But back to this question over here, the cot was green, and the market was going down. But it was going down, not going down with what are called IS signals, initiative selling signals, right? So all I told him is, yes, the environment is there, but the condition is not there, because the IB bar was not there, right? And the IB came around that 11:42 a.m. at 24,300. And from that time, the market has been steadily up. We are up at about 24,730, without a lot of initiative selling there. Right, so volume was telling us at 24,350 that price wanted to go up. But price was doing its little dance in between. Trying to misguide a lot of traders, and it shot a lot of traders that day. For about going against the information of volume. But in the next 2 or 3 days, it was up 300 points. So that is how volume precedes price and tells you what can happen next. Right, I'm going to bring another question up. And this was yesterday, and this also came to me on a DM, and this was that bar this gentleman was looking at, and it's a very good question, which is why I made it a point to bring it up. So as you can see in this bar, this is a sell side bar which is begun over here, and it's gone down, and it's got a 612 lot seller at the very bottom, and the price has gone down from 54.45 to about 55.20. So the question over here was, despite having a 612 lot seller at the bottom, why is the price up? Right? And it's a very good question, which is why I'm bringing it up to your attention also, because you should also have these kind of questions over here. Right, so I answered him. But if you're going to be having these kind of questions, just try to understand what has happened in this bar. So in this bar, the selling is started from right here, 4,328, 392.17. It's gone down, and it's gone down over here. So this is somewhere around 55.50, and this gentleman is come at about 54.45, 612. Right, now the earlier sellers are in profit. This guy is what we call a late seller. And what is actually happened over here with the 612, if you can make out these zeros right next to it, there is a zero above, there is a zero to the right of this seller, and there is a zero right next to this seller. This is what we call a limit order seller. Right, so this was an order kept by somebody to sell into the market, which got executed at the lowest price possible. It is not a market order. It is not even an LLT. And incidentally, this 54.45 was around the lows of the day yesterday, right? Now, I'll tell you something, okay, about smart money, because I work very, very closely with them and I understand, okay, how they think. They never trade at known highs and known lows of the market. Okay, they are not picking up those points, okay, to trade into the market. So somebody, okay, who sells at 54.45 at the day low is somebody, okay, who's a novice in the market. And this guy, okay, put in a limit order thinking, okay, that if it goes below day lows, okay, I'm going to sell it. We call such sellers late sellers. The bigger seller is the one, okay, who initiates into the market. In fact, okay, if some of you, okay, have been, okay, through the e-course material, the training library material, we make a distinction, okay, between the kind of traders, okay, who are there in the market. And we say, okay, some of them are early adopters, are innovators, are people, okay, who are in the early part of the series, okay, and those are the ones, okay, who move markets and are profitable traders. Contrast them, okay, with what we call late laggards, people late to the game. They are your rookies, they are your new traders, and they will always be on the wrong side of a move, right? So just because, okay, there is a seller, you need not, okay, think about this seller as a strong and a powerful person. And what this individual was doing over here was that he was focusing on the 612, ignoring all that was happening from the very beginning. Now the market came down to 54.45 yesterday, based on a lot of selling, okay, which happened at 5800 onwards yesterday. So after dropping 400 points, if somebody is, okay, selling 612 at 54.45 at the day lows, he has no understanding about how to trade into markets, right? Or, okay, he was trying, okay, to act cute, okay, and just go in for an extra percentage move, and that is why, okay, price moved, right? But the point over here is, don't focus on the role of only one player, especially, okay, if he's not an LLT. An LLT is somebody, okay, who will trade with a size of 2000 lots, 3000 lots. If you're going to be focusing only on all the elements or all the numbers of the chart, you're going to open yourself, okay, into a situation, okay, where you're going to get a little bit off or confused about what the market activity is. I don't want you to read all the numbers of the charts, okay? I don't want you to focus on every single number, okay, which is happening in the markets, because the market is moving, volume is going to keep coming in, people are going to be buying, people are going to be selling. You're not supposed to read every single thing which is happening. But what you're supposed to read is IBIS signals. You're supposed to read LLT signals. You're supposed to read, okay, something, okay, which is happening, okay, when it comes to a major point like a VWAP or a POC or something of that sort, right? So don't miss the wood, okay, for the trees. Okay, look at the entire forest. Okay, look at, okay, everything, okay, which is happening, not just, okay, one row. If you start, okay, looking at the market this way, okay, you'll have a lot more questions than answers, right? So this was, okay, number 2. If there are any more questions. So the question over here, how do you classify volume, whether volume below bar is for that bar or for the day? So we are not looking at volume below the bar over here. Whichever way, okay, you've learned to understand volume below the bar, use that way. What I am speaking to you about is volume inside the bar. And volume inside the bar, to the left of the bar, as you can see in all those red fonts, is sell side volume. And volume right next to it in the green color font is the demand or the buy side volume, and that is, okay, what you need to be focused on, okay, where the sell side volume is and where the buy side volume is. And some of this, okay, right now, like what is happening over here, this is a quiet period, we are in the lunch hour, the market, okay, is not doing a lot of things over here, right? But when it starts moving, you have to see, okay, who is moving the volume, whether it is the buyer who is moving the volume or whether the seller is moving the volume out over here, right? So focus, take focus, okay, on what is happening within the bar. Look at the buy side volume, look at the sell side volume, and take it over there. So the question is, okay, what is the view, okay, going forward? And the view is actually very simple. This is still a market which has seen a lot of buying. I'll just blow up, okay, the bank nifty to a 30-minute chart. So we were seeing this market, okay, making higher highs all through, and the market, okay, has just met a little bit of supply, and the COT, okay, is gone red now, right? So that's 1307 373. So this tells me that there is a little bit of profit booking which has come of all the people, okay, who have brought up early in the morning at about 5700, 5650 onwards, right? Now, for this market, okay, to go up even more, this red cot which is there on the 30 minutes has to become green. Okay, now when it becomes green, you will know, okay, immediately that there is a lot more buy side volume coming into the market. More buyers are coming into the market. Currently, if you can see this 1307 and minus 386, that is because all this 718, 1501, 979, 1453, most of them have booked and are taking profits out over here. So it's going kind of sideways. The 10 bar cot is about 1209, which is marginal. So most of that buying, okay, which we have seen, okay, from the open is booking. So you need to look out for new information over here, right? I still feel that if this market, okay, dips somewhere around that 5880 mark to find some new buying, we should be looking at buy side opportunities, and the eventual target of this is about 51,200. That is our expectation when we saw that early initiative buyers come into the market. So from here for now, okay, look at dips to buy into the market. It's a Fin Nifty settlement, and the Fin Nifty is also very, very interestingly poised. And the Fin Nifty is just a sister, okay, of the Bank Nifty. Whatever happens in the Bank Nifty will happen in the Fin Nifty as well. So just keep an eye out, okay, on what is happening out over there. So the question is, okay, do we have a custom time frame? The time frame is not important, okay, when it comes, okay, to an order flow chart, because we are not looking at the role of time. We're looking at the role of volume. So whatever information, okay, you're looking at in an order flow chart is going to be the same, whether that volume is represented on a 3-minute or a 30-minute or a 15-minute. The volume size is a little bit bigger, but it's the same volume. Everybody who's traded shows up on an order flow chart, and you can, okay, work with any time frame when using an order flow chart. All right. So one question is, you said something like big player knows something. By this, do you mean some big cash market buying is going to happen? I'm not focused, okay, on the cash market at all. We are focused on the derivative side of the business, which is a much more larger industry. It beats the cash market 10:1, and the volumes are much more bigger in the derivative side of the market. The cash market is a completely different animal. Okay, let's not get confused over here. The tools, okay, we are talking about are for derivative traders, right? We are talking about, okay, how best, okay, we can utilize this information to make ourselves better trades in the options and the futures market. So whatever you know about the cash, leave it, okay, at one side. I would also suggest do not use, okay, the tools, okay, which you use in the cash market to make trades in the derivatives market. The derivatives market is a specialized animal. Okay, it's a different beast. You have to treat and trade it differently. And if you're not got the kind of results, okay, which you always wanted to, okay, you're doing things, okay, which are not in sync, okay, with the derivatives market, right? I'll just take one or two more questions over here, and then, okay, we'll wind up, and I'll leave you, okay, to digest, okay, whatever, okay, information has been given. So the question is, okay, the value area and the VPOC has moved up in BNF. Yes, okay, that is the same thing, okay, which I mentioned. The profit booking is happening, which is why, okay, the VPOC has moved up. So this white line is the VPOC, and that's we spoke about this, okay, on Twitter also, and I made a thread also that the VPOC, okay, always tells you that there is a shift in the way, okay, the market was trading to that point in time. And now you need to be alert, okay, for another change coming into the market, right? So I'll leave you, okay, over here. Okay, with this. All I want to tell you is that there is a lot of information which is there at your fingertips, and these are tools, okay, which have been given to you for you, okay, to get better at the business of trading. It's up to you what you do, okay, with these tools. But I would certainly say that you have to add a lot more work. There is work involved over here. There is effort involved over here to understand these tools and get to know more about them, right? It's one thing buying a book. It's another thing buying a book and not reading it. And if you're buying a book and not reading it, you're no different from a person, okay, who does not know how to read, right? Because you're not utilizing, okay, what was given to you. So these are tools, okay, which are given to you. It's up to you, okay, how you maximize, okay, these tools. There is a lot of value over here. There is a lot of information. You will have to, okay, get yourself going. Just roll up, okay, your sleeves, okay, and get going and try to understand, okay, how best, okay, you can utilize this information to get better at the business of trading. We packed in our charts a lot of information for you to grow, whichever level you are, whether you are a beginner and you're just looking, okay, to start off with IB and IS signals or COT or something basic, okay, to keep you going, okay, for those few trades, or you're at a professional level and you're putting, okay, all those big trades. There is a situation, okay, here for you, okay, to get the maximum out of it, right? To support your journey, we will be doing a lot of live sessions. We already have Monday and Thursday 5 p.m. live sessions where you are welcome, okay, to join, ask your questions. We talk about market structure. We talk about market nuances over there. We explain to you, okay, how we are looking and identifying things. It's your mindset, okay, how you want to approach it, okay, whether you want to approach it, okay, as something, okay, like, just attend and don't take anything significant out of it, or you really want to learn and you want to, okay, get something maximum out of it. It's your way how you do it. We also have an accelerated program where, okay, we have condensed, okay, a set of learning videos together, and we have put them up for you, okay, to use, okay, at your convenience. You can learn and read it at your pace. That is what we called our e-course. That is 12 condensed videos on market profile and order flow, where we have bunched all this information together and presented it for you so that, okay, you can go back to it and you can review it anytime you want. So that's on our site. You can visit the e-course section, and it's again a DIY program, do it yourself, where you can go and you can refer to all these concepts which we speak to you about, right? And we have a session, okay, which we call the VMR, which came out, okay, because of a lot of feedback which we had. A lot of people asked for hand holding in understanding these tools, getting to understand the information in these tools better. So we have a live hand holding session, which is what we call the VMR, where we work with you during the market session, during a live session, and we interpret, okay, this information for you. We interpret, okay, what the charts are telling you, and we help you, okay, understand these tools in a much more sounder and a much more rounder way, so that, okay, you get familiar, okay, with all that the information part is all about. So that's what we call a VMR. We have, okay, 3 programs within it: a monthly, quarterly, and an annual. It's up to you, okay, how you take it forward, but it's power packed with information, with a lot of tools, and with a lot of knowledge, okay, for you, okay, to get better at the business of trading, right? In closing, I just want to say one thing, that if you're approaching derivatives and you're approaching derivatives without a knowledge, without a set of tools, without strategies, don't do it. Okay, there are a lot of people who have lost money thinking, okay, that derivatives, okay, is just another tool, okay, where 1 2 ka 4 ho jata hai. Just put 50 rupees and the 50 rupees becomes 100 rupees. It doesn't work that way. These are specialized people who are working these derivatives fields. Okay, there are professionals who are been in derivatives for 15-20 years, and they are trading the same time frame as you. They are trading the same instrument as you, right? And you have to be at your best, okay, to compete with them, to get better at this business with them. And if you are trading derivatives without strategy, without tools, you're opening yourself up to a lot of losses. Don't do it. All right. The better thing for you is, I always tell these people who are new to derivatives, do not trade. Learn the markets, understand the markets. If you cannot give the time, if you cannot put in the efforts, it's best, okay, you withdraw your capital and do not put it to work, because 90-95% probability, I can tell you, that without tools, without strategy, you will lose all your capital, right? Don't do it. Learn strategy, learn tools. The derivative world is evolving. There is a lot more technique coming into the market. Retail is not considered to be weak anymore. They are at shoulder, at par, okay, with a lot of other people who are doing derivatives today. And if you intend, okay, to do derivatives, get good at it, right? So I leave you over here. I wish you the best, okay, for the rest of the afternoon. The buyer is dominating. watch the VWAP for the last 1.5 2 hours of trade which are left, the last 1.5 hours which are left, and if the VWAP breaks, the buyer of early morning could be in trouble, right? So watch out for that, and I'll see you in another live session sometime next. Thank you for joining in.